Good morning. Happy Monday. Welcome to the show. Hope you all had a good Thanksgiving. Let's get to business. We got some bad news. December corn multi-year lows. Just look down at the quotes. Not good. Down 4.5. We have a lot of things to talk about. Serious conversations. Commodity markets are starting to come down. I have just a guy to talk about those. But before we get into that, we're going to get into a couple financial headlines. Producer Joe popped those up. U.S. stock futures open lower as traders wait for PCE data released on Thursday. Over the next few days, you're going to hear a lot about what we've sold. We had Black Friday. We have Cyber Monday. A lot of people took Friday off, and anyone who has an email account received about 50 emails on everything they could buy discounted, whether it would be Duluth Trading and we're getting stuff from there or high tech stuff. Everything's on sale. It kind of makes you wonder, are we going to sell a lot of stuff? I think we set a new record for sales online. They said sales online were up 7 to 8% from last year. It seems to be a trend. If I drove around Valparaiso, I could see a lot of big box stores that are empty. So with that, we're going to talk about what's going on with interest rates. Several Fed speakers this week. What's that mean? What's a Fed speaker? We have several. We have a Federal Reserve, and they have different cities. So you might hear me say Kashkari out of Minnesota. Fed speakers are allowed to speak and talk and give us little hints, and then they go into a silent period before a Fed meeting. So watch out for Fed speak. Currently, 10-year notes at about 4.45. Oil. We had an oil meeting scheduled last week. Oil is lower on OPEC meeting looms after this week. I'm not sure what happened there. There was an oil meeting scheduled. It didn't happen. Why are we talking about oil? Why are we talking about the Fed? And why are we talking about what we're selling for Black Holiday? Tie it into the American farmer is we're keeping an eye on commodities. There's no bigger commodity than the energy market. The energy markets are very important. Drove my daughter back to college yesterday, paid $2.86 for gas. That is a little tax break for the American public. Note, we have an election coming up in 24. There's a lot of reasons to get commodity prices down. So someone could say, we did that. Let's get in the show. Before we get our next guest, breaking headline. This just came out a little bit ago on Reuters. China's most active hog futures plunged more than 5%. We've seen a lot of volatility in hogs and cattle and everything else. To talk about cattle, I got just the guy, and we're going to bring him to the show here in just a minute. Mr. Brady Huck.
Joe Grisafi, Valparaiso, Indiana, contributor, ATI ProMedia.
Shout out to producer Joe. That's who produces the show. He's clicking the buttons. Apparently,
That was
he clicked
awesome.
the wrong one. I clicked that button. Mr. Brady Huck.
Brady Huck, Dodge City, Kansas, contributor, ATI ProMedia.
All right, Mr. Brady Huck, welcome to the show.
Welcome.
23 people watch me click the wrong button live. You know what's cool? This is a live show. There's no redos. There's no
That's
no retakes. This is get red faced. But that is producer Joe, and Joe is producing the buttons. Joe Grisafi is my brother. He's a registered commodity broker. He's my best friend. You're going to get me crying on TV. Speaking of crying, let's talk cattle, brother.
Oh yeah, a lot of crying. Yep, that's the cattle market's just been a tough week last week. Been a tough couple months, but really when we look at it all, over the last 3 years, we've had a great run up in these markets, and we know they just don't. The markets don't go up forever, Tommy. It's not nearly as bad of a move over the last month if you had some positions on. That's why we do what we do, right? This morning we've got the board. This morning is rebounding a tick, kind of mixed. Started off a little higher, but broke back to the red. Seen it chop around here this morning. We'll see how we finish the day. Bounces are expected when you have breaks like we've had. We'll see how the day ends here. Got a commitment
to chart a little bit, buddy.
What's that?
What's mean? I'm not in the cattle business. What's this chart mean?
Well, this is number of cattle on feed 120 days or more. This is, talks about how many cattle are going to be market ready over the next month. And it's one of the biggest headwinds for this cattle market over the coming months is the leverage and the lack of leverage that the feed yard has against the packer. At the end of the day, we need the packer to be hungry for beef, and we need consumers to be sending strong demand signals to the packer to go buy more. The number of cattle on feed 120 days or more, you start falling behind on marketings, and it just kind of compounds because those carcasses get bigger and you get backed up, you lose leverage, and we need that leverage on the feed yard side in order to see this market move up. Other thing we need to be looking at and a good indication of where this market's going to go is watching the cutout. Seasonally, going into December, we see some pressure on the cutout. We've talked about this in past shows that we've done, but we're getting kind of towards the tail end of this pre-holiday push, and retailers they're buying product a couple weeks before the holiday. They're not buying it into Christmas Eve, Christmas Day. They're loading up on product going into that, but nobody wants to be sitting with high-priced product after the holiday when you get those clearance specials and sales. But watch the cutout. Be great to see this thing climb higher. We need it to move higher if you're going to see higher live cattle prices, higher feeder cattle prices. Switch over to the feeder cattle index and 7-day rolling average of cash prices. We've seen this thing roll over, but this does a great job of illustrating how high this market's climbed over the past 3 years. Still pretty good prices, historically there. And if you've got inventory, if you're a cow calf guy, you've never had better prices to protect other than maybe a month and a half ago, but still great prices out there.
Got to put you on the spot, buddy, going full screen. You are a registered LRP agent. You're a registered commodity broker. You actually own cattle. Your dad is a veterinarian. Your grandpa had cattle. Someone calls you today. They call 1-855-737-FARM. They said, I noticed that young Brady Huck was talking. I was listening. I haven't done anything. I'm scared. What should I do?
Yep. There's a lot of things we can do, Tommy. And it's a different answer for different people, but managing risk, that's a choice that we make. And whether it's a put floor or selling futures as a hedge, or LRP, buying an LRP insurance policy. And we can offer that all in-house here at ATI. We got a great team behind us that can take care of you. And we'll take a look at your operation and see what tool fits you a little better. But the bottom line is there are tools to manage risk and protect you from these markets when they do melt down.
Good answer. I accept that. Can we talk about grains a little bit? I'm going to pop in my PowerPoint and see how we do that here. This is interesting. I noticed this. We're going to start in the back and work. After hours, we're going to have an options expert on, and that show will be available for advanced trading clients. But the NASDAQ bets on boom and 0-day options with new contract. What's that mean? Well, we have an options market, right, Brady? You and I trade options all day. And in the old days when options were introduced, there were quarterlies, like your big futures markets. You have your December and you have your September, and you go through the quarter, your March futures. And then they started doing monthlies, and then they start doing weeklies. To say that trading exchanges, stock markets, and everything else are literally a place to gamble, this would be an example of it. This article, NASDAQ bets on 0-day options with new contracts. But if you went to bed and gold, what's this mean? If you went to bed and gold's trading 2,000, you say, I think gold's going to be rally $30 today. You could literally place I don't know how else to say it, a bet. It feels like a bet to me.
Yep.
And then you can, but the risk reward is balanced also. You're spending money on premium saying gold's going to 2020, and you lose what you lose. So also it's controlled, and that's interesting. Going back to slides, looking down at my phone right as you were speaking, I noticed that soybeans were still up 2 and corn is down 5 or 6. Corn is now at multi-year lows. As you see, in 2022, there was a little bit more moisture in Brazil. And as we get to 2023, you see, Brady, we have these problems in South America.
Definitely some areas. Yep.
Go ahead.
Yeah, definitely some areas of concern out there. Have and have not. Southern Brazil that has had too much rain, and northern Brazil, central Brazil, short on rainfall. Have and have nots down there.
Hey, we're going to end the show with this pretty picture. These are the Reginelli kids building a snowman with an advanced trading hat. Mr. Huck, good job. It's not easy going live. I promise I'm going to hit
It's a lot of fun, though, Tommy. Boy,
I'm going to hit the right button to end the show. Everyone, have a great day. We'll see you tomorrow at 9 o'clock.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.